Hello, everyone. Now, there is a lot of talks and discussions on the AI bubble popping in the market. There are reasons to support it or deny it, but we all know anything can happen in this market, and it's always good to be prepared for any outcome. In this video, I'm going to give 6 steps I can take to handle this AI bubble. Please note, this is not financial advice. I'm not qualified to give financial advice. I'm simply recording my thoughts and sharing my thoughts with you. Please consider smashing that like button, subscribing to the channel, and let's continue growing together. Now, let's first look at the main reasons why some people in the market believe we are in a bubble. Now, the first reason is extreme valuations. Most of the AI-related stocks are trading at a very high level, similar to the dot-com era levels. For instance, Palantir is trading at 100 price-to-sales multiple. The second reason is concentration risk. The Max 7 that includes companies like Alphabet, Amazon, Apple, Meta, Microsoft, Nvidia, Tesla now make up 37% of the S&P 500 total value. The third reason is speculative spending. Companies are allocating up to 50% of operating cash flow to AI initiatives without clear return on investment. AI data center spending projected to hit $400 billion annually by 2026. The fourth reason is VC frenzy. 58% of global VC funding in Q1 2025 went to AI startups. The fifth is historical parallel. Analysts compare current enthusiasm to the dot-com bubble and 2008 crisis because of rapid price appreciation disconnected from fundamentals. So the question is how to handle this AI bubble, as we all have exposure to AI stocks, especially hardware and data center. I will talk about the 6 step by step. Please consider smashing that like button, as that will motivate me to do more videos. Now, the first step is to take the cost basis out. This is not an easy thing to do when the stocks are charging upwards every day, but we need to protect ourselves from the downside. This is especially true for AI infrastructure, data center plays like Iron, Nebius, CoreWeave, where the risk is quite high. These companies often rely on few big customers and have thin margins. If the AI capex slows, they will be hit the hardest. So if there is heavy gains, getting the cost basis out will help. The second step is to trim your big winners that are well-established players. For instance, Nvidia and AMD are chip sellers, and we need to understand this is cyclical industry. One bad quarter can drop the stock big. These are not companies that will guarantee recurring revenue. Now, the third step is to hedge downside risk by buying protective puts. Premiums for these should not be bad, as the sentiment is upwards. These put options protect from downside momentum in case the stock drops hard. Of course, the premium will be lost, but it's not much compared to the gains I would miss. The fourth step is to reallocate profits to other sectors that have higher upside. For instance, I did make videos recently on companies in healthcare, fintech, beauty sector, restaurant sector that have dropped really hard. The fifth step is to keep on monitoring fundamentals quarter over quarter, as these provide indication of weakness. It's best to take action based on data and not completely ignore the fundamentals, since the stocks are at high valuations. Perfect execution each quarter is required, and this requires monitoring and observation. Finally, the sixth step is to keep dry powder. Keep some cash. As you know, I've been selling some high flyers and holding cash. In case of the market reset, I can buy and capitalize on the opportunity. Now, I would love to hear from you. What are you doing to handle this potential AI bubble? Let me know your thoughts in the comments, and thank you so much for watching.